There's a hedge fund in Oslo that's targeting 200% return and based in energy equities.
You know, this story actually made me think of what we talked about earlier in the week in terms of a hedge fund betting on Russia. I think there's a lot of people who are actually pretty bullish on the oil trade right now, in the sense that they think oil prices have room to run. And this hedge fund is basically betting on both sides, going long on oil in terms of some oil prices, going short in the U.S. on MLPs, master limited partnerships. I thought that play was interesting because it may be a sign that this hedge fund doesn't think the infrastructure dollars that Trump has been talking about may hit the U.S. as soon as other people do.
Which is so funny, because if you're going to go short MLPs on a fundamental basis and the pipelines aren't going to get built, that means that oil prices are going to fall even more because the oil is going to be stuck in the U.S. So I wonder if it's also they're changing their business structure, MLPs. They're no longer going to be that huge dividend payer guy out there, being much more capital restrained, and capital allocation is becoming much more important. I wonder if it's also a bet on that. And I stopped the conversation.
No. I was just thinking, you're the three of us, you know the answer to that question better than we do.
I would speculate
so I was waiting for you to answer the question.
Perhaps that's the case. But this does dovetail with Goldman Sachs' Brian Singer saying this is the golden age, he said, for big oil. That in this kind of world where you're going to see more restraint on production, this is the golden age for big oil. Something you don't necessarily hear that much when the focus is on those E&Ps.